Welcome to the chat. Yeah, for us to understand better the perspective in which we are going to be analyzing and attempting to predict the direction of price from, we are going to be employing a counter trend trading style, which is the power of three. So we are going to be looking out for a trend, as you can see here. So by the close of the previous week, we are going to be looking at a swing high formed there. Then by the opening of the new week, we are going to be expecting an accumulation, then a manipulation for more buys to the upside, as we know that the market does two things: the market sells to buy and the market buys to sell. So if we are looking out for a sell opportunity, we are going to be looking for a manipulation to the buy side. Then if all rules are met and a pattern is formed, then we are going to be expecting a distribution to the downside after all the buyers are already trapped in the accumulation and manipulation. Then on the distribution, based on the entry model, you can take your entry during the week as the pattern follows. So this applies inversely. If it will be a buy as well, we are going to be expecting a swing low, an accumulation of orders, a manipulation, then a distribution to the upside. So inversely, so if it is a buy, this applies, you just apply this inversely. I hope you understand that. Welcome to the chart. You never know what kind of setup the market will present to you, but the ultimate goal is to look out for opportunities that offer the best risk to reward ratio. On the weekly outlook, as we are aware of, we employ the market mechanics, otherwise known as the liquidity providers concept. This tool allows us to be able to look into the future in advance to where price probably will draw to, and to make the adequate preparations in anticipating these likely events. We do not impose on the market, and whatever the market does, we respond intelligently. Now on USD CHF, right here on the chart, we can see these two red lines, one at the top, one at the bottom. These two red lines, these are the highs and lows of last week. These are the highs and lows of the previous week. According to the liquidity providers concept, we look out for liquidity zones, as these zones are trap zones. The high you can see here is a trap where we have lots of sellers trapped here, because those that sold last week, they set their stop loss right here, and those that bought last week, they set their stop loss right here. So now what does the market maker do? The market maker draws to where most money is, hunts the stops of retail traders, and moves the market in his intended direction so as to take money away from them. This is just the mode of operation of the market and how the algorithm of the price is hardwired. We all are traders, we all have our identities outside of the chart, but here on the chart we are all equal, as the price chart reduces us all to numbers based on our contract size. That is why in the market at all times you must be rational, you must be logical, and you must be factual. dealing with current reality. Being impulsive and emotional only makes us a prey for the predatory market. So let us get straight to business. On USD we can see that price closes consolidating close to the low of last week. Inferring from this, when price open, we can expect price to accumulate, take out this low, and if this low is taken out in an impulsive manner with one or two candles, we can expect a strong pattern to buy. Then we can make a decision to buy. Otherwise, if that doesn't happen, we can expect price to consolidate, take out the high of last week, hunting these stops in an impulsive manner with one or two candles and giving a strong pattern to sell. Mind you, there is a way that price draws on liquidity before it gives a counter trend, and all these is taught in the mentorship. There are examples on the chart of price taking out the weekly highs and lows. We can see right here this liquidity was taken, and what happens? Price reverses. We can see right here this liquidity was taken with a 3-hit pattern. You can see the first hit, second hit, and price reversed. So week in, week out, that is how the market moves. Liquidity is the energy of the market, and without liquidity the market will not move, just as oxygen is the energy for the body. Once a human runs out of oxygen, he is unable to move. So the market consolidates, grabs liquidity, then moves in the intended direction. As you can see, the previous week the high or the low was not taken, so after this range you can expect a liquidity grab, because the money is made in a ranging market. So you can see the whole of last week the market has been accumulating orders, hitting stops and ranging. So once the liquidity grab is taken, we can expect an impulsive move. If this low is taken, we can expect an impulsive move up, and if this high is taken, we can expect an impulsive move down. That is if it is taken in a liquidity manner, giving us a pattern and a formation. On USD/JPY, we can see price consolidates near the low of last week, so we can expect this low to be taken out with one or two candles, then generating a strong buy formation candle. Following from that, we can expect a sell to buy. However, right here we have a strong resistance, so price could consolidate to come and retest this zone for a further drop down. If reverse is the case, we can expect this high to be taken out in a liquidity formation manner, then we can expect a drop from USD/JPY. So those are the possible case scenarios. Liquidity and trap zones. Once price grabs liquidity, impulsive moves are made, and you can have a setup with a high risk to reward. On AUD/JPY, we can see price consolidating in the middle, close to the high, close to the low, and we have a strong resistance right here. So by the market open, we can expect an accumulation, a retest of this resistance. However, this is no longer a strong order block, as this order block has been retested. So we can expect price to take out this high and generate a pattern for a sell with one or two candles. If not, price could accumulate, come and take out the low of last week to generate a formation for a buy. Let us keep in mind that the market sells to buy and the market buys to sell. The market does this because forex trading is a zero-sum game. So for sellers to make money, they need to set a bait for buyers, and for buyers to make money, they need to set a bait for sellers. That is how the market makers that call the shots move the market. On Euro USD, we can see price consolidating near the high of last week. Inferring from this, we can expect this high to be taken out in an impulsive manner with one or two candles and give a formation for a sell. However, on Euro USD, we have been having strong buy patterns, strong support which has been failing, so price could consolidate to take out the low of the previous week to generate a new support and give a pattern for a buy. GBP USD, I will leave you to think and do this analysis on your own. On USD CNH, you can see the high and the low of the previous week and price consolidating close to the high, close to the low. However, there is no strong resistance within these zones, so you can expect price to either consolidate, fill out this fair value gap, take out this high and generate a pattern for a sell. Otherwise, right here, this is not a strong support. You can expect price to consolidate, take out this low and generate a pattern for a buy. So those are the possible case scenarios on USD CNH, as there is no clear direction on this pair. AUD USD, I'll leave you to do the analysis on your own. NZD USD, do the analysis on your own. USD CAD, we can see price consolidating near the low of the previous week. So once the market opens and if this low is taken out immediately, we invalidate the setup. However, once the market opens and there is a consolidation within this range, then after market takes out this low, grabs the liquidity and reverses, then we can expect this pair to probably buy, because last week this pair did grab the liquidity of the previous week and bought partially. You can see the low of the previous week was taken out and the market bought before continuing the downtrend. However, if price ignores this low and consolidates and come back to take out this high, then we can expect price to generate a pattern for a sell if this high is taken out in a liquidity formation manner. On Euro JPY, you can see the price ended in a consolidation manner for the whole of last week, and there is no strong support nor a strong resistance, as this is a weak resistance. So we can expect price to consolidate, take out this low to generate a pattern for a buy, or price could consolidate, take out this swing high, and take out the high of the previous week to generate a further pattern for a sell. Gold, you can see price consolidating near the high of last week, so we can expect price to take out the high, then generate a further pattern for a sell, so these fair value gaps are filled. However, if price does not take out the high, we can expect price to drop down to fill out this fair value gap, as we have lots of money sitting down here, or price could come further down, take out this low to generate a further strong support, as you can see that gold has been in an uptrend. On silver, you can see that price did consolidate since the last 2 weeks, as there is a strong resistance here, we have resistance within these zones, and probably this resistance is not that strong, so we can expect price to consolidate, push out this high and spike it up without giving a sell formation. However, once liquidity is broken, most of the time sell formations are given, and if that doesn't happen, we can expect this low to be taken out for price to create a strong support, for these zones to be broken, for silver to move further up. On USD JPY, we can see a similar pattern to Euro JPY, and there is no strong support or resistance from last week, so we can expect price to consolidate, take out this high to generate a pattern for a further sell. However, if price doesn't do that, price could trickle down, take out this low. Let me see. However, this is a strong support. Price would come here to retest this zone for a further push up. Nevertheless, if this zone is broken, we can expect a new support to be formed in a liquidity manner. On DXY, the DXY gives an impression for us to have a perspective into the direction of the US dollar pairs. And the whole of last week, price was in a consolidation. Price did not take out the highs or the lows of the past 2 weeks, so we can expect price to consolidate, draw on liquidity here, take out this low. If price takes out this low in a liquidity formation manner, then generates a pattern for a buy, or price could come up to take out this resistance. This is a weak resistance, to take out this high, then generate a further pattern for sell. On BTC USD, you can see price for the whole of last week, price did consolidate in a range. Price did consolidate in a range, and we can see that last week liquidity was taken. You can see price selling down, so we can expect price to consolidate and take out the high of last week for a formation for a further sell down. As you can see, price drawing towards the high of the previous week. However, there's no strong resistance here, so I doubt a bounce off from this zone. I expect this zone to be taken out, and if it is taken out in a liquidity formation manner, then we can expect a further sell down for price to create a new support. Or if price comes down to take out this low, as there is no strong support within this zone as well, so we can expect a liquidity formation for a further buy. Those are the possible case scenarios. Plan your trade, trade your plan, and most importantly, manage your risk and emotions. If you find this content useful, like, follow, share, and subscribe for more. Hit the notification bell so you can get alerts on more of this content. Have a peaceful week ahead.